Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
In an attempt to boost the real estate sector, the government met with all stakeholders to discuss several measures. That's including providing relief on the GST front, creating a stressed asset fund to provide last-mile funding to builders to complete projects, and so on. We have with us Mr. R. Varadarajan, the MD of Repco Home Finance, who joins us. Hi, sir. Thanks so much for joining in. Well, there was a meeting of the developers and housing finance companies with the government yesterday. Could you highlight the same for us?
I understand yesterday Government of India has called for the stakeholders meeting chaired by the Honorable Minister for Urban and Housing. See, the major issue raised in that meeting was about the stressed assets. How to see that those stressed assets or incomplete projects should be completed so that the confidence of the home buyers is enhanced, because the consumers, they have invested the money and they don't get the houses. So certain discussions took place there. And they were also discussing about some taxation issues, both on income tax and GST issues. I think they could not arrive at any decision yesterday, but definitely they will take it forward for the future to see that something is done on that front also. But as far as the lenders are concerned, like our housing finance company, so we would like to have the funds at an affordable rate, particularly when there is a scenario of increasing interest rate regime. Naturally, we have to pass on the burden to the consumers, then it becomes unaffordable to them. Therefore, if a scheme is brought out through the NHB, wherein for the housing finance companies, it is made available funds at a cheaper rate. Naturally, we will be able to pass on the benefit to the consumers and it becomes affordable to the home buyer. So that is another issue. So another issue faced by the housing finance companies is this balance transfer issue. Since there is no prepayment penalty to the consumers, so instead of having new projects, new homes, there is a lot of balance transfers taking place from one institution to another institution, and that is an unhealthy trend, that has to be arrested. At least there should be some penalty for the first 5 years so that people will focus on the new home buying rather than this balance transfer.
Mr. Varadarajan, in a rising interest rate scenario, how would you fund developers in an efficient manner to ensure that cash flow isn't hit?
For the housing finance companies, we have to depend on the market borrowing as well as the bank funding for onward lending to both the project funding as well as the ultimate home buyers. Therefore, it depends on the market. That is why I said some intervention is required from the government side as well as from the regulator side to ensure to make available the funds at a cheaper cost, at least for these projects, so that ultimately the benefit will go to the home buyers.
Well, sir, 80% of real estate is in limbo or they are struggling. What sort of remedies do you foresee from the government for the real estate sector?
See, government, very positive development is yesterday's meeting. I do hope that there will be series of meetings in the future also, so that they will come out with a meaningful solution to address these issues. In fact, for funding also, if you see recently NHB has announced they will be coming out with a scheme for the partial guarantee of credit to be availed by the housing finance companies. That will ultimately enhance the rating by the rating agency, and they will be able to access the funds at a cheaper rate.
Sir, lower ticket sized houses have seen some NPA issues. What's your take on that?
What we have seen in the field, as far as our company is concerned, we have not seen that much of stress for the lower ticket side. In fact, we face some problem only with the high ticket loans. Low ticket loans, and particularly affordable housing, we have not seen. But overall, yes, there is a report that there is a stress, particularly in the loans given to the unorganized sector or the non-salaried segment. But we should understand the situation there, because these particularly the low income group and the lower middle income group, when there is a stress in the economy, their priority will not be for repayment, and there will be some postponement. But ultimately, see, house is a basic need. Nobody would like to leave the house, and ultimately the entire amount will be recovered. That's what I feel. There may not be any issue on the overall recoverability, though there may be a temporary stress there.
Well, so how many accounts have been claimed by Repco under PMAI, and how has been the repayment from the government?
See, we have claimed around more than 1,000 units so far, and the claim we were able to get the claim processed quickly and get the amount also within the reasonable time. On the repayment side also, what we have seen on the field, the repayments are quite good.
Sir, what's the impact of INDAS on Repco?
In the AS, we feel it is going to be positive for us. So it's only the treatment of our income and expenditure, so that we are able to apportion it for the future years also. And the initial assessment by us is in the AS is going to be positive for us.
Okay, all right, sir. We'll sign off on that note. Thanks so much for joining in and giving us all those details. All the best for the remainder of this fiscal. Well, the markets are doing quite well, moving from strength to strength actually. A few of those stocks have moved to the high point of the day. We have HUL that saw some selling post its numbers. Now that stock has seen a bit of an uptick, and that helps the Nifty as well. So keep an eye out on that one. And from the broader markets, some of those banking stocks are doing well. Andhra Bank has moved higher. It's moving higher on good volumes as well. OBC as well has seen a bit of a spike, and even South Indian Bank. So pull up all those three banks, they have moved to the high point of the day as we speak. Well, on that note, we'll slip into a short break. Up next, we learned that the Parliamentary Standing Panel on Finance is likely to submit a report on banking reforms this month. All those details on the other side.
Hi, welcome back. The market is picking up steam. So the frontline indices now up about 0.5% and the mid-cap index matching steps at the high point of the day. Here's a CNBC TV18 exclusive coming in. We learned from sources that the Parliamentary Standing Panel on Finance is likely to submit a report on banking reforms this month. Parikshit Luthra, correspondent, joins in with more of what he's picking up on what this report could likely contain. Parikshit.
A parliamentary committee on finance has expressed concerns about the present banking crisis. They've urged the government to go in for reforms in the banking sector immediately. We are told by our sources in the Parliamentary Standing Committee on Finance, which has been looking at holding hearings on the banking crisis, bank frauds, the NPA crisis, that very soon, by the end of this session, they could have a report tabled in Parliament on what's going on and recommendations to the government. And in that, there would be concerns about the arrests of bankers that have been taking place. Over the last 1.5 years, we've seen senior management of various banks, public sector banks, private banks being arrested. And this, the parliamentary panel feels, is going to impact the decision-making ability of various banks. In fact, a top source, who is a member of such a committee, told CNBC TV18 that you cannot penalize a person for an error of judgment in a commercial decision unless and until a mala fide is actually proven. So those are very, very strong words, because they feel that these arrests by CBI, by the Enforcement Directorate, raids by the IT department, questioning by the Vigilance Department is really putting a lot of fear in bankers across the country. And not just these top central agencies, you even have state police forces carrying out arrests. So this will really hamper the day-to-day decision-making process and also retail loan facilities of various banks. They have urged the government to go in for governance reforms in the banking sector and also give more power, more teeth to the RBI to make sure that such problems, such frauds can be avoided in the future.
Parikshit, thanks very much for that. We have Mr. R. Gandhi, former Deputy Governor of the Reserve Bank, who joins in now. Mr. Gandhi, thanks very much for joining in. Indeed, it's been a worrying trend. You know, it started with bankers. We had independent directors who were taking a hit. Now we have some IAS officers as well who are coming under the loop. You think a report like this is enough to sort of stop this spate of arrests or perhaps even go on to restore confidence?
I cannot agree more on this. Because making commercial decisions subject to criminal procedure, that is fundamentally wrong. That is number one. Number two, banks, especially public sector banks, they operate in a space where all other type of bankers are also there, in the sense that private banks, foreign banks, even urban cooperative banks, they are all. And many times you'll find that the same decision has been taken across the entire banking system as a consortium or even as a joint effort. So to singular only the particular banks, again, that is an issue. And any criminal action taken, it immediately affects the morale of the entire banking functionaries, right from the top up to the bottommost level. So these are all day-to-day functions. Civil action only should be thought about. So that's why if the parliamentary committee had recommended such a reform to be brought on, I cannot agree more than that. Certainly, there is a time of the day requires that kind of reforms come on the scene.
Okay, all right. Mr. Gandhi, there's a proposal that suggests that maybe the RBI can be given more powers. How far can this go, according to you?
See, powers in terms of, if you are talking about the powers relating to disciplining the line functionaries of the banks, right from the top, that MD, CEO downwards, then first level power should be with the board of directors. It is a board of directors who should have the first responsibility for overseeing and monitoring the functioning of the line functionaries. So the disciplining the MD, CEO should be first the responsibility of the board. The board should be empowered to have the appointment of the CEOs, the compensation of the CEOs, and the removal or any other punishment that should be accorded on the CEO. If the compensation is market related, then there is a great opportunity will be there to fix a variable rate of compensation, right to recompense, and the withdrawal of facilities. So these kind of disciplinary action, which amounts to civil action against the if anybody has to cross the line, and that will be much more effective and will be fully appreciated by the line functionaries also rather than a criminal action. So I would think that I would expect that the first level of power should be vested with the board of directors. RBI's role comes in the next stage because the RBI has a role to monitor the overall banking functionary that it will have. So to that extent, RBI can step in. But individual actions will have to be flowing out of the bank's own governance structure.
Right. Mr. Gandhi, I take your point that empowering the board of directors would indeed be the first step. But my understanding of what Parikshit told us also is that the main emphasis or the focus point rather of this report also deals around a lot of governance reforms. Besides what you told us, what might be the scale and scope of reforms that you think is required to deal with this issue?
Yeah, for public sector banks, quite a lot of governance reforms are needed. Already there is a set of recommendations from several earlier committees. The latest one is Dr. Naik committee. That has gone into well into detail how the public sector governance structure, public sector banks governance structure can be strengthened, both in the short term and the medium term. That is already available. So if you would start from there, the results will start flowing.
Okay, all right. Thanks so much, Mr. Gandhi, for stopping by and, in fact, giving us all those details. Well, the markets seem to be in a good mood today. We've moved to the high point of the day. Hindustan Unilever, yes, that's a stock that was gaining, but also SBI. I think it makes sense to pull up the intraday chart of that stock as well because that's suddenly taken off. And United Spirits has seen a lot of selling in this week. Now that stock is trying to pull back some of those losses. So till yesterday, the stock was down. United Spirits, let's put the intraday chart up for you. It's suddenly seen a bit of a volume spike. Remember, in this week itself, it's still down close to around 6.5% even after this spike. And even Cadila Health, it was down more than 3%. Now it's recovered most of those losses. So keep an eye out on that stock. Well, time to slip into a short break. Up next, President Trump reiterates that a stronger currency has put the US economy at a disadvantage. More on that once we return.